Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. So, I have a very interesting article titled Silver Coin Premiums Soar, Signal Alt Money Demand as Reopening Recovery Hype Fades. Definitely interesting stuff. It's going to be talking about silver post COVID-19, what the markets are going to be looking like, how you could invest, and also where silver is in the short term, right? The medium to long term is very bullish, but the short term might not look that attractive to some investors, especially the ones with weaker hands. So anyways, let's jump into this article. Before we start, make sure to smash that like button. Let's see if this video can get 150 likes. Everyone go like the video right now. Thank you so much for tuning in. So silver is the matrix of precious metals. On the one hand, it is an industrial metal critical to the production process in many of the world's most in-demand products. And that's definitely true. Silver is used for so many different things, especially in the new age, where the new technological era we're advancing in with 5G technology, electric vehicles. Silver, being the most highly conductive metal for thermal conductivity and electricity, is definitely a big player in the game. And on the other hand, it has been money for millennia, playing second fiddle as spending asset relative to gold's wealth. The question is always which of these demand-supply attributes is more prevalent at any one time, and that's definitely true. It's like it's very wishy-washy. Sometimes silver can be used as this monetary metal, sometimes it's industrial. I definitely think a larger portion is used in the industrial side of things, but that doesn't mean that the tides can't change, that silver can't be seen as a monetary metal like gold is again. So right now, is it the blue pill of blissful ignorance that the economic recovery is imminent and V-shaped, or is it the unpleasant truth of the red pill that is the beginning of the end of the current system and a post-COVID world will look very different and require protection? Well, we may have the answer. The price of silver coins is surging, monetary demand as future prices sink, industrial demand somewhat shunning the hope-filled hyping of stocks recovery off the lows in March. And in fact, this is the largest physical silver coin premium since Bernanke disappointed the markets in 2011 and since Lehman sent investors scrambling. And that's definitely true. When we saw silver in 2011, premiums were high. But right now, we're seeing the same exact thing. Paying $30 for an American Eagle that is sold around $15, $16. What does that mean? That shows that there's a limited supply of silver, but also the physical asset is short. And in fact, this is the largest physical silver coin premium since the Bernanke disappointed the markets in 2011. So you can see Additionally, the demand for monetary silver may be driven by the fact that it has never been cheaper relative to gold. In ancient Greece, now this part gets interesting. In ancient Greece, in the age of Pericles, gold was valued at 14 times silver, so the ratio was 14 to 1. Right now, we see the ratio as high as 111 to 1. Actually, it got up to 125 to 1. In ancient Rome, Julius Caesar valued gold at 12 times silver. It remained this way for centuries, and that's because that's what it came out of the ground. It comes out of the ground roughly 8 to 1, roughly 10 to 1. Even in the earliest days of the United States, 18 centuries after Caesar, the Coinage Act of 1792 established a ratio of 15 to 1. So, according to law, $1 US is supposed to be 24.1 grams of silver, or 1.6 grams of gold. So those pieces of paper in your wallet are not dollars, they are technically Federal Reserve notes. In modern times, there is no longer a fixed ratio between gold and silver, though its long-term average over the last several decades has been 50 to 1 and 80 to 1. This is a lot higher than in ancient times, but circumstances are obviously different, which is true. Today, gold is still widely used as a reserve by central banks and governments around the world. And investors still buy gold as a hedge against inflation and uncertainty. And that's definitely true. During times of economic turmoil, that's when gold is seen as a safe haven. Silver, on the other hand, as we detailed above, has countless industrial applications. It's a critical component in everything from mobile phones to automobiles to solar panels, and there's definitely more: dental alloys, space equipment, solar technology, photovoltaic cells and cameras and mirrors. It's used in medical wall paint. It can purify water. In ancient history, in ancient Egyptian time, they saw it as magical because it could purify water. So, like gold, silver is also a hedge against inflation and uncertainty. But silver's demand fundamentals are more heavily influenced by overall economic health. If the economy is in a recession, silver prices can fall because there's less demand from the industry. Gold, on the other hand, doesn't follow that pattern. In 5 out of the last 6 recessions, in fact, gold has increased in price. That's why recessions, extreme turmoil, can lead to massive spike in the gold to silver ratio. Gold goes up and silver stays flat or falls. Just prior to World War II, as Hitler launched the invasion of Poland, the ratio spiked 98 to 1. In 1991, the first Gulf War began. The ratio reached 100 to 1. Today, we're back in that territory. As this morning, the ratio is 110 to 1. It's been as high as 120 or more in recent weeks. So you can see every time there's something happens, a catastrophic event, the gold to silver ratio peaks. The ratio may stay elevated for a while or even go higher, and that's what a lot of people have been speculating lately, that the ratio could actually become more exaggerated. But in the past, the ratio has always returned to more traditional levels, and that's a key thing to remember. It always returns to more traditional levels, meaning that silver is going to outperform gold, even when the world was facing Adolf Hitler or the Great Depression. So it stands to reason that if they keep printing money, which they already are, and the ratio eventually returns to historical price range, the price of silver could really skyrocket. And it won't be due to the economy. And in case you need more reassurance that the recovery is not coming anytime soon, Goldman's reopening basket is significantly struggling to outperform. COVID-19 reopening portfolio struggling to outperform. So you can see the gold line is COVID-19 reopening portfolio in US dollars, and the black line is COVID-19 lockdown portfolio in US dollars. Global silver demand nudged higher in 2019 thanks to a 12% increase in investment demand as retail and institutional investors focused their attention on long-term investment appeal of the white metal. So, according to the World Silver Survey, 2020, total demand inched by 0.4% despite the trade war. Investment demand grew to 186 million ounces, the largest annual growth since 2015. Exchange-traded products, also called ETPs, holdings stood at 728 million ounces at year's end, up 13%, achieving the largest annual rise since 2010. Meanwhile, silver mine supply fell for the 4th straight, with output declined by 1%. At its core, silver is a monetary metal. It tends to track with gold over time and historically outperformed gold in a bull market. So, wow, that's a great article. I'm really glad I found this, and it's definitely true. I want to go back to the last part. Silver demand growing. Silver demand growing, the supply diminishing. We know low supply, high demand shoots the price up. That's exactly what's happening. That is exactly what's happening here. So, when we look at prices, when we look at COVID-19, when we look at everything, the economy, everything is looking towards bullish prices. I mean, not only is it just versing gold, the gold to silver ratio, which is definitely one of the main drivers, but also if you're looking at the inflationary rates that we're pumping in these dollars in the economy, in the system, it's definitely not doing any justice. The gold to silver ratio will recover, meaning that silver outperforms gold. Either gold depreciates or silver appreciates, and more than likely it's going to be silver appreciating, lowering the ratio back to more traditional, more normal, more equal levels. So anyways, I hope you enjoyed this video. If you enjoyed this video, make sure to smash the like button. Also, make sure you subscribe. I post daily videos every single day. Stay tuned, because I'm busting my butt to give you guys the newest, latest, freshest, most up-to-date, recent news in the world of precious metals. If you love precious metals, make sure to smash the like button. If you love to learn about precious metals, if you love to be informed about precious metals, if you love to support silver stacking channels, Make sure you like the video. Let's see if this video can get 150 likes. The link to this article from zerohedge.com will be in the description. Hope you guys enjoyed this video. Like I said, I post daily videos, so if you do want to stay updated on a day-to-day basis, please make sure you turn on post notifications so you get notified every time I post a video as well. Thank you so much for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.